So I made a video a while back that if the market crashes, I would sell everything and buy this dividend stock here, DFN. Actually, it was FTN.to, but DFN is even better than FTN.to because it's never missed a dividend distribution. If we look at, let's look at Max here. You can see, look at all the dividends. It pays 10 cents a share per month. So right now, if you buy DFN.to at this price here, your yield, here to calculate your yield, if they continue to pay 10 cents a share, your yield is about 15.9% per year, dividend yield of 15.9% on this mutual fund. Now, that could be a thought, right? What if you can guarantee yourself 15% for the rest of your life? Now, of course, you don't know if it's guaranteed for life, but they've never missed a dividend distribution since inception of 2004. So even during the crash, they were able to pay dividends. So that's really strong. Even during the market crash of 2008, 2009, they have not missed a dividend distribution. And you'd be getting right now, if you buy it at 7.5, you'd be getting a yield of almost 16% per year. But now my only concern with this is that there is absolutely no capital appreciation. As you can see here, if you look back 5 years, it just keeps dropping. It keeps steadily dropping. Let's look at Max. It used to trade at some point at $20. Right now it's at 7.5. So yes, they've never missed a dividend distribution, but your capital is decreasing for some reason, unless you really buy it at the best times possible at a crash. So for those who bought it in 2008, when it was trading at $5, they're getting a yield. For those who bought it at $5, they're actually getting a crazy yield. They're getting a yield of 24%. 24% per year. If they had bought it in 2008, they've been getting 24% a year, 12 years almost, and they've got a bit of capital appreciation. At some point, they had higher capital appreciation from $5 to $12, but right now it dropped to 7.5, and they still have capital appreciation. But that's the thing, though. This capital appreciation isn't really guaranteed. As you can see, it's all over the place. Well, it's pretty steady, but steadily dropping for some reason. Every time it crashes, every time it drops, it's unable to go back above its starting. So really, I think it's a good mutual fund. It's never missed a dividend distribution. My only concern is you really have to buy it at the right price, which is, of course, who knows. But if in 2009 it was trading at $5, what you have to look at is the drop. You could see that it was trading at 20 and went all the way down to $5. So it dropped 75%. So it dropped 75%. So maybe the next safe point would be, let's say right now it's trading at some point it was trading at $8. Maybe if it reaches $4, it would be a good point to buy it. That would be my opinion. If we compare it to the crash where it dropped 75%, let's say it does not drop, let's say it doesn't drop 75% as well, but let's say it drops 50%, that could be a good point. So as you can see, the core holdings of this mutual fund is quality stocks. So these stocks alone, they pay dividends. But in addition to the dividends, this company here, they sell call options against their positions. So that's how they're able to increase their yield and pay these amazing dividends. And the other risk with this mutual fund is the net asset value is not above 15. They don't pay the dividend. Right now, the net asset value is 18, but for sure it's going to drop in March. But it has been above 15 since inception because they've never missed a dividend distribution. So in terms of missing dividends, I'm not too worried about that because they went through a stock market crash in 2009. They dropped 75% and they were still able to pay dividends. So I'm not worried about the dividends, but I'm worried about if I buy it at $7.50 in 5 years. Yes, I've been getting 10 cents and I've been getting 10 cents a share every month, but what will my stock be worth? Will it be worth $6, $5? So I think it's a great stock, but just got to choose the right price to get into it. The other thing is that they can terminate this mutual fund at any time. Well, not at any time, but it has a termination date. The next termination date is December 1st, 2024. But what's been happening is they just keep renewing it for an extra 5 years since inception. So I'm not too worried about that either. But if they do terminate it, you might not even get the price that you paid for. What you're going to get is the net asset value minus $10. So whatever net asset value is at the time of termination, you're getting $10 less. So right now, let's say at termination, net asset value is $18.51, you'd be getting $8.51, which of course in this case it's not bad because you bought it at 7.5, but you don't know what net asset value will be at termination if they do terminate this mutual fund. So that's really another risk with this mutual fund. But as it's written here, it's an attractive alternative to other income vehicles. Leverage to performance of high quality stocks, capital appreciation potential, not really, most potential, but really there's no, it hasn't been happening unless you buy it at $5 during a market crash. The only thing that's really good here is $1.20 per share annually. They haven't missed that. Now, if you look at at FTN.to, see this one I think has better capital appreciation because it moves a lot, but this one has missed dividend distribution. It doesn't always pay dividends every month. So if you look at the past 2 years, you can see that it's missed a few. But when it does pay a dividend right now, if you buy it at this price, 5.72, it pays about, I think, 12.5 cents a share. It pays 0.1257 cents a share, 0.1257 cents a share divided by, if you buy it at this price, 572, you're getting a yield of 26%. So if you buy FTN right now, you're getting a dividend yield of 26% when they do pay dividends. So that's a difference. DFN.to is more conservative. You will get your dividend, very good chance of getting your dividend. This one, you'll probably get it 80% of the time. But when you do get it, you're getting a crazy yield if you are buying it at this price. Not only that, if you do buy it at this price, there's a good chance that when the market recovers, you're getting a decent capital appreciation from 5.7 to 7.5. If you look at the past 2 years, it was trading above 7 easily. Over here it was trading at 10, but doesn't look like it's going to come back to 10. December 2018, it reached $3.60. So imagine those who bought it at $3.60. They're getting a yield of about 47% right now. Every time it pays a dividend, they're getting a yield of 47%. And you can see that after that, it's missed a few months, but it's maybe paid January, February, March, April, May, June, July. It skipped August. It paid in September, October, November, December. So yeah, it only skipped 1 month since, actually, it skipped a bit more than that. So it skipped December 2018. It skipped December 2018 and August 20. It skipped December 2018 and August 2019 in the past 2 years. So it's really not bad. In the past 2 years, it has only skipped 2 months. Plus, if you had bought it at 360, you'd be getting a ridiculous dividend yield of 47 or 46%. So I'd watch this. I'd definitely watch this. I don't know if I'd buy it at 5.7, knowing that in December 2018 it was at 3.6. I think if it drops below 4, it's definitely something worth buying, even if it doesn't pay dividends all the time, but it's too attractive at that price. Now, would I put my whole portfolio in it and just keep collecting 40% in dividends per year? That would be kind of relaxing, right? But then the risk becomes, is your capital preserved? If you buy it at 4, let's look at max. In 2009, it reached $2.40, but then came back up to $11.83. It's really volatile. It's not as clean as DFN. Here, let's compare it to one another. Let's put DFN red. All right, so they sort of move the same way. Here, let's look at the past year. So the past year, you can see that DFN dropped 33%, while DFN only dropped 17%. So DFN is safer. FTN has more movement, but every time one drops, the other drops. So they're sort of in sync, but just not in the same way, not at the same intensity. And you can see that FTN did not pay dividends between June 2011 and January 2013. They did not pay dividends. And also during the market crash. So between November 2008 and May 2009, they did not pay dividends, while DFN did pay dividends. So that's something worth considering. Yes, you'll be getting a much better yield with FTN, but it won't be as consistent as DFN's dividend yield. Right now, just by looking at this, I would be tempted to buy FTN more, because even if I don't get paid dividends all the time, but when I do get paid, it'll still be more than the dividends that DFN offers me. But the question is, once again, at which price should I get in? I'm going to watch it. Maybe I'll buy some in my RESP because it's a long-term investment anyways. But here, let's look at 5 years. If I had bought, let's remove DFN here. If I had bought FTN 5 years ago, I would have bought at $9. Right now it's at $7 or even $5. So the scary part with this is really your capital. There is no capital appreciation with this mutual fund. If you look in the long term, you've lost value. The only thing that compensates for the lost value is the dividend. So if we look, what's the inception? So let's say you bought it at 14.5 over here, but with all the dividends that you collected, does it compensate for the fact that right now it's trading at $5.72? So you lost about $9 or $6 or $8. You lost about $8 of capital since 2004, but how much dividends did you collect since 2004? So just approximately here, it would be about 14 years. Let's say if I remove the years where they didn't pay dividends, and they pay about $12.57 a share per month. So times 12. Yeah, so you would have lost $8 in capital if you had bought it since 2004, but you would have made about $21 in dividends. So 21 minus 8, so you would have made $13 in appreciation or in dividends in 16 years. So divided by 16, divided by 12. So it's as if you're getting 6.8 cents a share in dividends per month, considering that you lost all that capital appreciation. So yeah, so even those who have bought it too high, because of all the dividends they've received, they're still profitable, but obviously not as much as those who bought it at the perfect price. So in my opinion, I think I would just watch it, give myself a price target. If it reaches it, I'll buy it. Now let's go see what the net asset value of this is. Now this is not up to date, but last month it was $16.11. So if it drops below 15, they don't pay a dividend. So as you can see, it's pretty close. For sure, it's going to drop below 15 very soon. So most likely there'll be no dividend next month. And this one has a termination date of this December. And once again, if you're a Class A shareholder, you're getting the net asset value minus $10. So if the termination date was today, you'd be getting $6.11. But this isn't really up to date with this price over here. But you get the idea. Great dividend yield. Just gotta buy it at the right price. Definitely something to watch. All right, so if you have any questions, leave in the comment section below. Also, let me know which one would you buy. Would you buy DFN or would you buy FTN? Leave them in the comment section below. And once again, if you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. Thanks for watching.